this whole issue of the promised 100 billion per annum for developing countries for adaptation and mitigation finance is not a political issue. It's a de-risking issue.
That links actually very specifically to the 100 billion target. And you said it's about actually de-risking. You can have a clarity of commitment, but that also needs to have the political will to follow it up. And that's where if you don't honour those commitments, you're actually just inherently adding risk to a project, which will lead to additional pricing and a higher cost. So if governments make commitments, they have to be honoured. And that's part of the reason they're actually declaring for those commitments.
Institutional investors, of course, attach a lot of importance to seeing both adaptation and mitigation finance packages being delivered. We know already that the goal of $100 billion per year by 2020 will not have been met. And so COP26 will be an opportunity for the donor community to restore confidence of emerging and developing markets by really setting out a clear plan for how to achieve their figure, possibly going beyond it, and then really undertaking discussions in good faith on what's to follow. And for investors, the delivery of those finance pledges is also a practical question. Everyone's familiar with the challenges of funneling private investment into emerging markets and developing countries. And so public finance needs to play a key role in helping to unlock that private finance through blended finance mechanisms and sort of wider collaboration between MDBs, the finance sector, and governments.
I don't know how blunt I should be, but I think that there are quite a few public and semi-public institutions that could take on more risk.
And in a way that enables a genuinely just transition. The need for advanced economies to deliver on the USD 100 billion of climate finance for developing countries is certainly one of those issues. There are too many pending issues to be resolved this November in Glasgow for the negotiations to be derailed by broken promises from the world's largest economies.
I think the opportunity is enormous, as people have been setting out today, and time is against us. So really, when it comes to the 100 billion, it's just a question of trust and commitment. And I think the message from investment community is very clear to governments to deliver and ensure that that is there and isn't a barrier to the kind of change that's needed.
The other element of the 100 billion that's absolutely crucial here is, look at we've had this morning, actually on the call, we've had Akin, we've had Solomon, we've had Ayman. They are all chief executives of sovereign wealth funds in Africa. So, and those sovereign wealth funds, they are very focused, as we've heard, on a domestic mandate, bringing in additional capital as well as deploying their own into investable projects, many of which are renewable energy focused. So that 100 billion is also will be made available to the governments in Africa and then to their sovereign wealth funds to allow more projects to become investable. So that 100 billion is actually, it has a very real end and a very material purpose. So again, I would emphasize that it's vitally important that that comes in, because that will help unlock those projects that we've been talking about this morning.
So this climate challenge will really be won or lost in the developing world, and we really look to donor countries to deliver on their pledges.